Yeah, good day, folks. This is Executive Zone where we wait, we trap, and we strike. So, welcome back, guys, to another interesting section. I know it has been a while since I post last. I'm sorry for that, but trust me, that was not intentionally. I just decided to stay away from social media for a while so that I can spend more time doing some personal study and observation, like understanding and refining my edge to be more bit stronger in this time. So today I'm going to be talking about, I noticed there's something off in the way I do trade before, and I know some people will be having that issue, and I'll be talking about that. And it's the structure part in the SLK. My concept initially is SLK. And what is SLK? Structure, liquidity, and key level. So I'll be talking more about this structure, how you can use your structure and your key level. I won't really be talking about liquidity because once you have a valid structure and a valid key level, you will definitely find liquidity inside it. So but we drive into the chart and see that now, you get me? So there's something I want us to know also, is that as a disclaimer, the main SLK that was taught by Fortman, it actually focus on using a current candle, like how some people do trade it. They may just see, let me just draw an illustration. I'm sorry, guys. I need to I want to draw an illustration too. I'm sorry. Yeah, the way people do see it initially, they may just see an OCL like this, and another key level maybe disrespect it like this, another candle disrespect it, and they will consider this as a disrespected OCL, and they'll be expecting the next candle to open. No, it will go bullish now because they'll be expecting the next candle to come and close above it. The next candle should close above it. Then they will go, let's say this is on the daily, and they will go on the 4 hours to look for a breakout, then trade it. Yeah, that's the way Fortman explained it, and it has actually helped a lot of trader. Yeah, but the way I do trade it now, I like the way I do use the concept after my studying is way different, my approach. Meanwhile, it's not that the one that Fortman teaches is not working, is working, because that's what I actually learned from my mentor that taught me this, and is using it well. But everybody has their way of learning, and everybody has background before getting to a particular level. So that's just what's happened. So don't get me wrong. The Fortman approach works, and many traders have become consistently profitable using it. But the way I do use it is different. So let's dive into the main source of this video. By now we should all know what external range liquidity is and internal range liquidity. Let me just draw an illustration. When we have something like this, I'm sorry, guys, these are the external range liquidity. External range liquidity are the liquidity outside. These are the what? External range liquidity, external range liquidity. These are external range liquidity, these are external range liquidity. And what is external range liquidity? I want to see if I'm recording. Okay, external range liquidity are those extreme highs and lows, extreme highs and lows. So they are the one outside the extreme highs and low. And for you that are watching this video at first, what is liquidity? My own explanation about liquidity is liquidity are the turning points in the market. Some trader will tell you liquidity are stop loss of order, pull. Those turning points are liquidity for me. Those external highs and external low that give you a turning point. As you can see in this place now, this is a turning point that make the markets come down. This is a turning point that make the market goes up. This is another turning point. This is another turning point that make the market comes down. This is another turning point. This is another turning point that make it goes up. This is another one that make it come down. This is another one that is making it what goes up. So these are the what? These are the external liquidity, and you can see all these small one inside are the what? They are the internal liquidity, right? So external liquidity, those are the extreme points of the market, the extreme highs and low. They can also be classified as buy side and sell side liquidity. They can also be classified as structural swing high and swing low. Like I call them structural swing high and swing low, but they are still external swing high and external swing low. So, and by now also, I'm not really explaining deep, I'm just briefing this because that's not where I'm going to. But before I get to where I'm going to, you just need to understand a particular thing. You get me? So there are also other things again. There's another thing we call internal range liquidity. What are internal range liquidity? Internal range liquidity are those liquidity inside the external range. They are the highs and low inside the what external range. Remember what I explained about liquidity? I said liquidity are the what turning points in the market. So there are those extreme high and low that give you a particular turning point. So these are what I'm coming, guys. External high. So that if somebody wants to maybe draw it out, it won't get confused. Sorry. So now I said internal range liquidity are the what are the highs and low inside the what external range liquidity, or inside the structural swing high or swing low. So what did I mean? I mean, if we have something like this, maybe let's say this, and market is doing something like this to a particular key level, right? It's doing something like it won't do it perfectly like this. Let me draw the way it's going to look. Sometimes it will just look like this, sometimes it will just look like this. So let's assume there's a particular, maybe this disrespected key level here. Okay, is where price is trying to come to before it can follow the major move. So you see all these move that happens here, you see all this push that is up. Where's our external range liquidity? We know that our external range liquidity is this high here, because it's the extreme high after price take out this external low. This is our external high, and this is our new external low that should be our target. But okay, I'm coming. I'm trying to explain something, so you guys should just external sorry, it's external high, and this is external low. Yeah, so in this scenario now, market did what? Accept external low by breaking it. There's something I call acceptance and rejection, but I'm not explaining it in this video because I don't want it to be too complex. So but market break this structure, take out this external low, then we know that our next target is this what? Next external low, and this is our extreme high, which is the what? External high. So we know that everything we are now, we are in this range of this external high and this external low. So let's say we have a key level here, but on the weekly, you won't, on your 30 minutes, you won't just wait for price to come to this push that happened here can take weeks, months, days. But all this small break that is happening inside it now, they are now our what? Our internal highs and low. They are the internal range liquidity. All these are now our what? Internal range what? Liquidity. All these, they are the internal high, internal low, internal high, internal low, internal high. So in this point now, price has do what? Shift structure. I'm not yet to start explaining stuff. It has shifted structure because this is our last internal low, and this is our higher time frame key level. When we get to expectation and execution, we understand this perfectly. But I just want us to know that external highs and external low, they are the extreme, they are outside, they are the one responsible for sponsoring a larger move. While internal low, they are the one inside an external range liquidity, and they are majorly used for a short time move to a particular key level or to follow an external range liquidity move. So we knowing that now, I'm not yet to explain to you guys as a newbie, just want to sharpen something. So you that did not know this, try to look for a way, and you are a newbie, try to look for a way to understand this perfectly to your own way, because this is actually one thing that I feel is also important in the market. You need to understand what is an external high and what is an external low. So with no further ado, let's move further. Since I've explained external high and external low, since I've explained external range liquidity and internal range liquidity briefly, we also need to understand the phase of markets we have. We have three type of phase. We have three type of market phase, which is expansion. Expansion. We have retracement. We have what we call retracement, and we have what we call sideways or consolidation. Anyhow, so these three phases too, they are very important for you to understand, and this phase are the heartbeats of every market. Like this expansion, which is when they are the heartbeats of every market. What did I mean by this? Let's use an uptrend, for example. Okay, let's say this is our external low, This is our what? External high. Let's say this is a key level that is very fresh on the higher time frame, and you now want to start. You know that once price has taken this external low here, the once price has taken this external high rather in an uptrend, once price has taken this external high, it has given us a what? A bullish structure. So we know that our next target is price needs to retrace into a particular higher time frame key level to make it efficient, to make the structure efficient, because we have what we call efficient structure and inefficient structure. So the moment price is now creating on a lower time frame, is now creating all these small internal move. This is called retracement. These are called retracement. Is retracing into a particular what? Higher time frame key level. And from here now, once price gets here, you can wait for market to give you a sweep and a break, and then expansion now do what? Start to occur to a particular what? New external leg. You get me? So this process of market coming down like this is called retracement. You get me? And this process of markets pushing up like this, the process of markets pushing up like this is called expansion. Let me put it down here. I want to do something there. I just hope what I'm explaining you guys understand it. Although I've do explanation of this on my video before, one of my video, but let me just explain it again. So the process of price moving up now is called expansion, right? So but now let's now assume that okay, market price has expanded to a particular key level. Now this is our new external. No, this is our external that price has taken out, right? So price is now, we now expect price to start giving you a pullback. So but when price is giving you a pullback, there's something we call dealing range. We are still going to talk about it. Dealing range is what give you where you are supposed to look for your higher time frame key level. So let's now say, for example, they're expecting price to come to this, maybe this FEG that was here and a key level here. You're expecting price to come here, right? You're expecting price to come there. But when price was coming there, back, price did something like this. Price was doing something like this. Was not actually giving you a particular move. And this, before coming here and pushing up, this thing that happens here now is called consolidation phase or sideways. This thing that happened here is called consolidation or sideways. Anyone you want to call it, they are still what? The same. So you can see, and this process I just drew now is what we known as order flow. I'm sorry guys, I want to do something. Yeah, okay. This process I just drew now is what we known as order flow. You can see here now price take out a particular external leg, we trace back to a particular, okay, let me label all this. This is a demand key level. I call them demand key level. This is a particular external high. All this thing I'm explaining, you are still going to do it on the, show you guys on the chart. So this is our new words. This is the external low. So this is our new words, external high, which is our words target, which is the target. You get me? So you can see in this point now, which is the target. This is another new word, demand key level, and this will be our words, new words, new. Okay, let me just use this instead. I just hope you guys are getting something. I hope you guys are getting something. So you can see now in this image, this is where the whole move started from. Price take out an external high, leaving this external low as a protected low. Price come to a premium level, which is this demand key level here. So price did what? After taking this external high, it needs to retrace. Price retraced back into the demand key level. From the demand key level, it expand back to take out the next external high target. So after market taking out this external high target, it retraced back into this what? Demand key level again. But when it was retracing back into a demand key level, there was a sideways move, a consolidation move. And this consolidation move can actually take 5 days, 3 days, 2 days. The same thing to this retracement phase can take a month. This expansion move too can take a month. But you don't want to start waiting till price now get to a particular higher time frame demand zone. That's when you now start using your internal structure for your intraday move, your intraday move as a day trader. So that's just it about this. And all these things I just explained now is what I call order flow. And order flow, this is just an order flow of a larger market, you get me? So we knowing that now, and I've already do explanation on that. Now we can able to understand what external range liquidity is and what internal range liquidity is, and an order flow of a phase, expansion, retracement, and sideways. That now bring us to the way I do frame my buyers, you get me? That now bring us to the way I do frame my buyers. One thing before I explain the way I do frame my buyers is, there is one thing you need to understand, right? You need to know the type of trader you are. And you knowing the type of trader you need is about knowing your personality. It's not that you just wake up today and say, oh, I'm a day trader, oh, I'm a scalper trader, oh, I'm a swing trader or a position trader. No, that's not how it works. You did not determine the type of trader you are with your mouth. You determine it with your personality. And what are these personality? What you are going to ask yourself is, do I work full time? Is it that the type of, because as a trader you need to have an extra side also, something you are doing, even though if you are a very big profitable trader, out of that your trading schedule, you need to have other extra things you are doing that is giving you income. Maybe you venture into agriculture or into estate management, other things that is giving you income apart from trading. So at that time now you need to understand that your personality. And the question first is, do I have a full-time work? Do I work full-time? Is my work 9 to 9? Is my work 7 to 7? What is my type of personality? Is it that my work, once I'm at work, I don't have time to come to the chat? Once you understand that, that's when you now understand the time frame you are going to use. Because the time frame are what? Are fragile. It's just the personality that you need to understand. What you do on 1 hour time frame is the same thing you do on 4 hours time frame. It's the same thing you do on weekly time frame. It's the same thing you do on 15 minutes. It's just your personality that differentiates it. Another thing is, can I monitor the charts all day? If you are a type that you have a full-time work, I'll say you should go for a swing trade. If you are the type that you can monitor the charts all day, I'll say you should go for a day trade and a short day trader. You should be a day trader and a short day trader. And another thing is, am I patient enough to hold trade for days? So that is why I just explained now. If you are a type that you can't hold a trade for a particular day, it's better you just go for a short day. Within that day, you want to close your trade. But if you are a type that can know the trade for like 2 days, 3 days, go for a full day trader, which is an intraday trader. And there's another thing, do I prefer quick decision? If you are a type that prefer quick decision, just go for scalping, sharp out of the market. But you going for scalping does not mean that you won't wait again. You are still going to wait, but it's just that it will be quicker. You understand that? So I just need to say that before we move into the way I do frame my own buyers. And the when I do frame my own buyers, what I feel that it was missing when I was trading the SLK that was taught by Fortsman, and what I feel that it was missing was disclaimer. I already said that it's not that the way it teach does not, it works because there are other people using the same thing and they did not even dilute it and it's working for them. But me, I find it hard one way or the other. Get me? So now the first thing you need to understand, I need to do 2 things. And what are those 2 things? Is break down into expectation and execution. Is break down into expectation and execution. That's just the 2 things it's break down into. And under my expectation, what am I expecting? My expectation is, first, one thing I will know is understand the words. Okay, let me do it like this. Under my expectation, first thing I will do is what? 1, external range liquidity, or structural, anyone you want to call it, structural swings. That is the structural swing highs and low. That's the first thing you need to know, right? You need to first understand. And before you even get to this, there's something you need to do. This is 2. It's 1 now. I'm sorry guys, I did not write it there. First thing you need to do is you need to understand how market, or let me say price, sorry. First thing you need to know is you need to understand how price react to your external range high or external range low. And what is that reaction is? That reaction is if price, there's something I called acceptance and rejection. So you need to know if price accepts a previous external low or if price rejects a previous external low. That's one thing you need to know first, right? The second thing is you need to now identify the external range liquidity or structural swing legs that is controlling the market. Why am I saying market? Controlling the price. So in this now, the second thing, this are expectation. How you build your expectation is the next thing is identifying the structural range liquidity, the external range liquidity or the structural swing leg that is controlling the price, which is, this means that did my external high, let's say for example, okay, I'm going to give example of this. I'm going to draw a chart of this. And the next thing is sweep of liquidity. And the next thing is dealing range, which is, I won't write down short before, but let me write it full, which is premium and discount. Because we all know that if we want to buy, we buy at discount, and if we want to sell, we sell at premium, right? So, and this one is for what? Understanding the what? Market direction. Yeah, this is the first thing I want to do first. This is the first thing I want to do. And this thing I want to do first, I'm coming guys, let me try to, as far I'm doing it, I'm trying to push it up, so that we have enough room to explain things, you get me? So then later on we'll not see how we go about it together. Yeah, so now I've explained that first thing you need to do is you need to have an expectation, right? So, and your expectations is how price reacted to the external range liquidity, which is acceptance or rejection. Majorly is first knowing the market direction. Am I bearish? Am I bullish? Am I going to still stay away from the chart? And what will make you to understand your direction is the external high, external range high or external range low, which is knowing if market accepts it or rejects it. The second thing is identifying the external range high leg, like the leg that is pushing the price. That is their leg that is controlling the price. That if price disrespect that leg, then if you are in a bearish move, for example, then market have shit bullish. Next thing is liquidity sweep and dealing range. But have it in mind that the first thing I first do is I'll go to a lower time frame. For me, for example, I'll go to like 1 hour time frame to look for my what expectation. And on 1 hour time frame, I'm not focusing on the internal structure, I'm focusing on the larger picture. I'm looking at the larger trade that breaks structure. This is what I mean. This is what I mean by that. Let me just try it. 1H. Because all these things I'm explaining now, we are going to go to the chart and we are going to see the way it works. Let's say this is 1 hour. Now let's say we have a bearish structure. I want to okay, let's say we have something like this. So at this point now, when I come to the market right here, when I come to the market, this is 1 hour, and price has given us, let's say this is our external range here. This is our external range ER low. This is our external range low, and this is our what? External range ERI. This is our external range I. So when I come to the market first, once I come to the market first thing I first do is I'm not interested in these internal structures. No, I'm not interested in this internal structure. I first want to do what? Like shrink the chart like this. If the chart is something like this, I just want to shrink it and see the larger move. So if I'm able to see the larger move and I see that, oh, market did what? Break this structure to the downside. Then now, if I see this break structure to the downside, I want to know if markets accept it or reject it. And what is acceptance is a body of a candle closing below this external low. And what is rejection? A body of a candle, a wick of a candle, wick and close above it. So in this scenario now, let's say market accepts it. Once market has accepted it, that's one thing. I know I'm bearish. But for me to be bearish, I need to know the leg. I need to mark out the leg. The leg that gives us this break of structure to the downside. And the leg is this external high and the external low. So I know this external high here. This external high is my what? Invalidation area. I'm literally explaining how I do frame my buyer. So this is an invalidation area that I know that if I have a point of interest somewhere here, and if this point of interest did not hold when price is pushing up, and take out this invalidation area, I already know that this bearish structure is no more valid, and I'll start looking for way to look for bullish position for a bullish move. You get me? So, but now this is my what? External high, and this will be my what? External low for a what? Target. So now on the 1 hour, you see that on the 1 hour, I did not first enter the 1 hour and start looking at the current structure, because the current structure can literally be an internal structure, which I don't want to do. Me being inside an internal structure, the disadvantage is you won't understand where the internal move will stop. You will get lost inside the internal move, because when you get to a particular external liquidity POI, you won't know. You still want to be trying to be following the internal move, and before you know, market will take you out. But if you are able to first understand the larger structure, that, oh, we are bearish, and since we are bearish, market should still come back for this next external low as our target, and this should be area that market should not come to. And if markets come here, that means, and you should expect it, that means our structure is no more valid. The next thing you now need to know is, you want to know if the external high did not swept liquidity. If it swept liquidity, is a what? Is a protected high. That's another way to know if the level is actually a strong high. So in this point now, this structural high did what? Swept this liquidity here, which is a what? A strong one. Now I already have another what? Sweep of liquidity, another point. So once I have a sweep of liquidity, what will I do now? I'll draw my what? Dealing range. What is my dealing range? Fibonacci from the high to the what? Low, like this. So I already know that if I want to sell, I should look for a key level. I should look for a higher time frame key level above this 50%, which is my what? Premium zone. So you can see how I was able to what? Frame my buyers, my larger time frame buyers, like a larger picture. You get me? So there's another way this can appear. Let me still use the same bearish structure, but it's fragile. It can work for any. This thing I'm doing on 1 hour now can work for 4 hours. It can work for weekly. That's why I said you need to understand the type of trader you are. So now let's say we have something like this. Let's say we have something like this. What am I doing? I'm coming, guys. I will just need to withdraw it. Let's say we have something like this. Yeah, let's say we have something like this. We already know that this is our what? External low here. This is another what? External low here. Yeah, so first thing, remember, first thing you want to know your market direction. So in this scenario, you already know that your current leg is to the what? To the downside. It breaks structure to the downside, right? So you know we are what? Bearish. Next, you want to know your structural leg, which is this what? Which is this what? Structural high here. Which is this structural high here. But now, next thing I tell you that you need to know your what? Sweep of liquidity. So you can see this structural high here. Did it sweep any liquidity? No, it did not sweep any liquidity. So that means that price is still coming here. Price is coming here. So if I want to draw my dealing range, I will draw it from the area that swept liquidity to this low here. And on a higher time frame, I know this is a liquidity, and I'll look for a key level above this liquidity. You get me? So now if I want to do my intraday move, I can now start looking for this internal structure to start participating for a pullback. Now I know that I'm in a what? Retracement phase. So once price gets to, let's say, particular key level here on a higher time frame, then I know the retracement phase has finished. Then we should follow expansion phase. Likewise, the same thing here. So that's the first thing you need to understand first. Like the first major thing you need to understand is your expectation. So you know that in this expectation now, I know I'm in a bearish structure, and my expectation for this bearish structure to continue is to come to this premium area here inside the higher time frame key level. I don't know if my explanation is clear. So the next thing is now, the next question you now ask yourself is expectation. The next question you ask yourself is your what? Expectation. And what is your expectation? What is your expectation? Your expectation is you now, your execution, Jerry. Sorry, your execution now is now. The question you now ask yourself in your execution is one. Am I counter trading to a higher time frame POI? That's the one thing you will ask yourself first. Second is, am I at the higher time frame POI, and am I following the trend? This is the second thing you are going to ask yourself. You get me? Now if you are, let's now say for a counter trading, I'm doing a brief, like elaborate explanation before I diving into the chart. I'm sorry guys, I need to check something. Sorry. I just need to check something. I should not be caught off guard. Okay. I'm sorry, I'm still coming back. I'm sorry guys. Okay. Under Euro USD, GBP, KPY. Oh, good. So let's go back to our explanation. Yeah. So I don't even know where I did. I shall know I did somewhere. Okay. So now back to our expectation. I said you want to understand something, and what is that thing you want to understand? Is you want to understand something, and that thing you want to understand first is, am I counter trading? What did I mean by are you counter trading? I'll still use this same scenario here to this same scenario I draw here for the 1 hour, because that has been the example we have been using since. I just want you guys to pay lots more attention to this, because I don't want to say much, but this is one thing you won't find, like, I'm very sincere, outside anyhow. So now you want to know, am I counter trading? Let's say this is a, okay, let's say we have a higher time frame supply key level here. We have a higher time frame supply key level here. So you want to know that, oh, am I actually counter trading? As price, okay, you want to ask yourself, as price getting to the higher time frame key level that is going to follow the bearish trend, if price has not getting there, that means you want to take some short buy to this key level. But the buy you are following, you already know where it's going to get to, because the buy can take week, it can take months, it can take days. You get me? So you already know that, okay, I'm counter trading towards the higher time frame key level. And if you are counter trading towards the higher time frame key level, you are also doing the same thing in the sense that you want to know your current break. After your current break, did price take out the leg? You want to do your expectation. Did price sweep liquidity? If price sweep a liquidity, you want to draw a what? You want to draw your dealing range. You want to go to a higher time frame, maybe 4 hours, or maybe on 4 hours. Yeah, you want to look for a what? A QM or stuff, and you want to what? Allow the market to come back into it. Then you use 5 minutes for your confirmation if you don't want to enter directly before trading. I know that where will be your next target? This internal high. Once price gets to this internal high again, price can decide to pull back or do some sideways before pulling back, then move. But once price gets here, all the buy you are following, you wait, you full stop. That's when you now know that, oh, that's when the next question come in, that am I following the higher time frame POI? Now price has get into the higher time frame POI. What do you want to see again? You want to see price give you a sweep. Once you see a sweep, the same thing. Then this point, you know, you are following your what? Higher time frame what? POI to a what? A particular external low. So you can see how the market move. This is a complete order flow of how markets move. What I just explained to you here now is what me personally known as order flow. What me I personally known as order flow. That's what I just explained now. You get me? So there's another thing I want to explain, but that will be on entry. Let me just tell you. Let me just breathe it in cheaply. Like, there's something we need to know. The type of entry I do use. Let me just write it here. Entry. The entry I do use is QM, A shape, V shape, DKL, which is disrespected key level, and what I call plug and play. But this plug and play is FEG with a key level inside it. So these are just my major entry I do use, but there are rules I do follow when I want to use this entry. I don't just enter them blindly. I don't just come to the chart and say, oh, this is a QM, okay, this QM should hold, oh, this is apex, this apex should hold. No, there are rules I do follow, and which I'll be sharing with us here now. And then we now go to the chart, and everything we have explained here so far, we now come into the chart and bring it out. So the rules I do use is, one, let me say entry rules. Is one, if you have both fresh QM and apex. And what is apex? Apex are the what? A and V shape key level. Sorry. So if you have both fresh QM and apex, you use the what? I use the QM instead of apex. Instead of apex. That's the first rule. But now, by now you should understand what fresh and unfresh key level is. So I don't want to start explaining that. There are some things I don't want to explain. So, but it's something that you can study on your own. So if QM is unfresh, I use the apex instead. Okay, these two, OCL is part of it. OCL. So 3 is, if QM and apex are on fresh, I use the OCL instead. So 4 is if FEG is closer, I use a key level inside the FEG known as plug and play. So these are just the rules, like the rules I do use for my entry. Just these 4 rules I do use for my entry. So now let's dive into the chart and let's illustrate it on the chart based on everything I've explained from the beginning to the end. But before we go into the chart, let me go through what I've explained to you guys. We start from understanding what is external high and external low, and it brings us to internal high. It brings us to internal high and internal low, right? So we first talked about external high and external low. Then from there we talk about the other flow, which is face of the market. We talk about the face of the market. Then after that, it now brings us to knowing what I called it now brings us to knowing what I call expectation and what execution. So it brings us to knowing what I call expectation and execution. And we also talk about what entries, about our what entries, like the rules to follow for your entry. So these are what we talked about so far, right? So these are what we talked about so far. So let's go into the chart and let's work on something. So remember the first thing I said, that we use the 1 hour first. What do you want to, you can see I'll be explaining this based on, you can see this move that is happening here now. This move that is currently happening is the same thing I did, nothing special. And all this move that has happened, the same thing, nothing special. But let's go into the chart, then I will show you guys. Then I will show you on gold also and some other paper, but I majorly focus more on gold and euro USD too. So you can see on this move now, on this particular leg on the 1 hour, I want to focus on the current leg. I don't want to start going back and forth and start understanding what is happening overall. No, I want to focus on the current leg of the market. You get me? Current leg of the market. Always have that in mind. Focus on the current leg of the what market. So now what happens here is that you notice that market did what? Take out this external. This is our what? External range liquidity low. You can central bottom centralize. So you notice that market take out this external low here. So when market take out this external low, what do you want to do again? You want to mark your what? High, your external high, which is the leg. This is the external range liquidity high, and this will be your what? External range. You can see now that I did not come to the 1 hour chart and start looking for inside this leg, because all this thing that is happening here is a what? Sideways move. But I was able to take some move inside it. Why? Because I understand what the market is doing, right? I understand what the market is doing. So now I now want to know, this external high, is it a valid high to use? How will I know if it's a valid high to use? First is I'll go to a higher time frame key level and see if this, I know I did not explain this on the explanation. I want to see if this external high starts from a higher time frame key level, which is, I'll move to the daily now. So on my daily, this is my external high. It's literally start from this what higher time frame key level here. That's one thing. From this supply key level here, then I'll go back to the 1 hour. I now want to see, does it swept liquidity, or did it rebalance a particular imbalance? That's two things I want. That's one of the two I want to see. Is either it rebalance a particular large fair value gap, or it swept a previous liquidity before breaking. So in this scenario here now, I can't actually see a valid liquidity that it was being swept, but it did what? It actually rebalanced this large imbalance here, this impulsive move, or this imbalance here. It actually did what? Rebalance it. And if you want to check also, you can also say this is a what? A sweep for it, and this is also another sweep here also, before it break this structure to the downside. So this is a what? A valid, this is a valid zone that I'm going to now label as my what? Invalidation area. I'm going to label as my invalidation area, and this low here, I'll now label it as my what? Next target. As my what? Next target. So you can see what you're able to do on the chart now. You're able to understand that, okay, this is my invalidation area. This buy that is happening, if the buy happen and did not respect a particular key level and disrespect this invalidation area, then I know I'm going what? Bullish. You get me? So now what is the next thing you want to do? You want to know your dealing range. Since I'm in a bearish zone, I want to look for a higher time frame key level inside the what? This premium zone. So I'm going to draw my dealing range from this current level that swept liquidity to this low here. Then I'll move to the daily as well, and sometimes you can use the weekly depending on how you are seeing the chart. So on the daily now, there's this, inside this my discount zone, there's this larger imbalance. There's this larger imbalance there. So inside this larger imbalance, I'm just going to drag it like this, and inside this larger imbalance, I'm going to pick this key level. This is a what? I'm trying to pick my what? Supply key level. Let me just write it short. This will be a supply key level 1, because we're inside an imbalance, right? So price can decide to use any of them. You get me? So this is another supply key level, and this should be the last one here. But the way I do trade, I don't enter directly from here. No, I look for confirmation from there. If I stop here, I look for my confirmation. If I get my confirmation, I follow the confirmation. If I do not get my confirmation, I wait. Move has finished. I wait if I did not see my confirmation. So now now that I know that, okay, I'm buying, I already have a what? Higher time frame key level. That's one thing you need to understand. Now you already have a what? Higher time frame what? Key level that you're expecting a pullback. You're expecting price to be efficient. So the pullback should either react from here, or from here. These are the 3 key levels. So if price did not react from any of these key levels and disrespect this my invalidation area, then I know the market has what? Changed from being bearish to what? Bullish. So you can see your expectation now. Now my expectation is bearish, but my execution will be what? Bullish. My expectation is bearish because I know if price gets to all this key level inside this FEG, it should stop, because price needs to rebalance that FEG. But my execution is bullish because I can't wait. This can take months before getting here, so I need to just be entering a bullish move till price gets here. So what is my bullish move now? Majorly, I even use 30 minutes most of the time. So what is my bullish move? My bullish move is now knowing where my break of structure is and blah blah blah. You can still use your 1 hour if you want, but since we have been using 1 hour, let's just stay on 1 hour. So on 1 hour, you want to see a valid break, not just anyhow break, a valid break that takes out a liquidity, and then you know what to do. So a valid shift of structure. So on 30 minutes, I'll be considering this as a break to the downside. So there was a shift of structure here, and this shift of structure is valid because it did what? It take out this liquidity here, and I have my what internal low here. I have my internal low here. Price take out this internal high, also take out this internal high. So what did I need price to do next? Pull back. So if price wants to pull back now, I'll now use my what 4 hours. What am I expecting to do on 4 hours? Where price will pull back to? So if price wants to pull back, remember the entry rules. If QM is fresh, you use the QM. If Apex is fresh, if Apex and QM is fresh, you use the QM instead of Apex. If QM is not fresh, you use the Apex. And I don't want to start explaining the rule again. But because of that break I have on 30 minutes, initially I used to use 195 minutes and then I'll refine it. You get me? So on my 195 minutes now is also a break here. Then what did I want to use? I want to use my what QM, Apex, or anyone. So in this scenario now, the QM is still what fresh. Then I'll focus my scenario on the QM. Then I can go to 4 hours to refine. From 4 hours, I can refine it to this. But there are some times that if you refine, you will miss entry. So it's better you just leave that zone and look for confirmation on the lower time frame. So yeah, now when price pull back now and tap into it, then I'll now move to 5 minutes. What do you want to do on 5 minutes? Confirmation. I'm coming. I want to show you guys. Okay, you can see here now on 5 minutes now, this is the level. So when price taps into it, what do you want to see? A structure shift. This is a what? A structure shift. From here is a structure shift. Price take out an internal high. This is our internal low valid. It swept this what? Liquidity. Then can just drag it a little bit like this. Then I'll move to my what? 30 minutes. What did I want to do on 30 minutes? I want to look for that specific what? Key level that can what? Push price. So can you see the way I'm framing the buyers? Can you see the way I'm framing the buyers? So on this 30 minutes, if this is the break, sweep occur, this was initially going to be the low. But what did price did? Price did what? Miss it out here. This is a what? A miss entry. But there's one thing one of my mentors taught me is that anytime you have your entry, because of miss entry sometimes, always put your entry above, a little bit above it, some pips above it, right? Maybe 10 pips or 5 pips above your point of interest. So if I put it pips, a little pips above it, that's when your measuring tools come in. You just measure. How will you know the pips above it? Is by measuring it. That's when your measuring tool comes in. You can just use this. What is that measuring tool, sir? I've forgotten the measuring tool, but I know I'm going to get it. I think the measuring tool is this price range. Yeah, so you are going to put it from here and just measure. This is like 0.9. So this is like this is not even up to 10 pips. 10 pips should be this. So you can just use measure it above, like 2 pips or 5 pips above. But I'll be using 2 pips above it. So 2 pips above it, then you just drag it here, and then your stop loss should be at the invalidation low, and then target the what? Next high, which is this high. Or you can target 3 RR minimum. So you can see how price did what? Move. You can see how price move here now. Price did not come to your POI, but it did what? It tap you in at a particular level. You get me? It tap you in at a particular level. So what will you do next again? What will you do next again? You just keep on following that rudiment. Now that price has do what? Now price has getting to your target, one entry. What will you do next again? Look for the next break of structure. This is the next break of structure. After this break of structure, this is your next internal high. Price accepted. This is the internal low. Did the internal low swept liquidity? Yes, it swept this. It swept this liquidity here. If you zoom in, you will see it better. This is a liquidity. It swept this liquidity here. So after sweeping that liquidity there, what will you do again? 195 minutes. What do you want to do on 195 minutes? You want to look for your key level. And what are those? This is the break here. What are those key level? A QM, Apex, or FEG anyhow. So now in this scenario now, I have an FEG closer to it. Is there a key level inside that FEG, disrespected key level? No, not at all. So I won't really use it. So this apex has been used. There is no KM. So the next thing is this what? OCL. So when price tap into this OCL, which is your what? Demand KL, I don't want to enter directly from here. So I'll move to what? 5 minutes. Sorry guys. So sorry, this is another demand key level. Okay, this is it here. So when price tap in here, I don't want to enter directly. What do I want to do? I want to wait for that confirmation. And what is that my confirmation? A structure what? Shift. A valid structure shift. So my demand zone is here. A structure shift happens here because this was a sweep and a break happens here. So once you have a sweep and a break, what do you want to do? You want to go to your what? 30 minutes, or even you can still move as high as your 1 hour. What do you want to do? You want to enter for me what? You can still move as far as 1 hour. What do you want to do? You want to enter for me what? QM, apex. You understand those stuff. So in this scenario now, I have a QM here, which is this. This is a QM. Then the QM is still fresh. Then I'll put my entry of the words QM and I will enter from here. Stop loss here. Measure 10 pips. 10 pips ahead. Sorry guys. I said 10 pips. Rather, mention 2 pips ahead or 1 pip ahead of your entry. But I used to use 2 pips. So my entry will now be from where? From here. Stop loss this low. TP. Your TP should be your what? Next invalidation. Your next invalidation area, which is this. And you can see it's a complete what? 3 hour. You can see what price was doing all the way here was just what? Consolidating. You can see the power of you understanding moves is very high. Very high. So that's just the little explanation. So you can do well to backtest it on your own, study it also on your own, and try to see how it works. It's the same thing too I did here also. Same thing too I did here. Yeah, now this is my what? The same thing I did. I'm doing here. You see, I have a what? A demand key level here. So on my 30 minutes, a level has been completed already. So price break this. This is the external eye I have here. I said external eye. This is my what? This is my internal eye. This is my internal eye I have here. But can you see how market reacts to this internal eye? I can't really call this a what? A valid acceptance, a valid break. So since this is not a valid break, I know this low that caused it should be a liquidity, like what I explained initially. So coming to 195 minutes, you can see that is not a valid break. So I already know that if this is not a valid break, and before then I already have this level. If that is not a valid break and this is my area that price should take out, where did I want to enter from? QM. You understand that entry? This QM here now, price has used it, right? So it's not fresh, but the level that is still fresh is this, like an engulfing apex level, which I mark as my what? Key level. So now me knowing this now, I now notice that me knowing this now, back to my 30 minutes, price will take out this, right? So I sell to take out this, and I'm selling to this key level. You can see I took one entry here, following the same procedure, nothing changed. I took one entry here and another entry here. This entry was on Monday, get me? This one was on Tuesday, which was yesterday. This was on Tuesday, which was yesterday, and this is another one. So this one now that I am in now, how did I notice it? So I noticed price break this structure to the downside, right? So after price break this structure to the downside, I check the 145. It's also a break of structure to the downside. So I need a level to enter from. QM. At first, I missed this entry here. I did not actually miss because I have an FEG I hope, and I also have this level. So price use the FEG and does not use this OCL. So now that but price can still come back here. That's why I left it. Price can still come back here. So now that I have this, remember the entry procedure also. I mark this QM as my level, and I try to refine it also on 4 hours, which is still good. So but this as my entry, as my word supply, is called supply. I called it supply KL, key level. So when price tapped into it, then I use my 5 minutes for confirmation. Price tapped into it, 5 minutes gave us a sweep, a break, then I use my 30 minutes. I know above it should be entry, or you can use your 1 hour, anyone, which is this. But may I use 1 hour in this scenario. 1 hour, I use this one here, and I put my entry there. That's what I did, and I'm expecting price should come to this level here. The same thing to GPP the same thing to GPP That's what the little thing I just did, and I'm expecting price to come lower here. GBP USD, yeah, there's something I want to explain to us on GBP USD due to the other way of looking at your buyers. So let me delete it majorly. Come to your 1 hour. Remember what I told you guys on your 1 hour, that you need to first understand. You are looking at your current leg. You are not interested in the old leg that market is using. No, you are looking at that current leg that market is following, and the current leg is this. Price did what? Take out this external range low. When price take out this external range low, what do you want to mark out next? You want to mark out the high that is responsible for taking out this low, and the high that was responsible is this high here, right there, right? Is this high. So next thing you want to see is, did that high take out, did this come from a higher time frame key level? If you go to your daily, did the high come from a higher time frame key level? It did not come from a higher time frame key level, because on your daily this is not a key level, but you can still mark this. But before then, market have used it multiple times, so it's not more valid. So you can see now this is not coming from a higher time frame key level perspective, right? So you go back to your 1 hour. Going back to your 1 hour now, you want to check another high that is closer, another high that is close, another high that is much. Why did I mark this? This is internal high. The high rather is this one. I'm sorry, is this. So this high now, I want to know if it's coming from a higher time frame key level. Okay, yes, it's coming from a higher time frame. No, the D we have. No. So you can see these are the higher time frame key level I have. It's actually not coming from a higher time frame key level. We have this OCL. So you can see it's just stuck in between somewhere. It's not from a higher time frame key level. It's not at all from a higher time frame key level. So that's one thing I want to know, that okay, since it's not coming from a higher time frame key level, let's check again. Let's check something. Is there a liquidity sweep? There is no liquidity sweep. There is no liquidity sweep. So this point here is not valid to be used. So since this point is not valid to be used, it will be used as a what? You can just label it as what? Internal high target. So since this is your target, internal high target, because it's not a valid stuff. So where is the next high after this? The next high after this is actually this. Is this. So if this is the next high, so what do you want to check? Is it coming from a higher time frame key level? That's one thing you need to know first, understand first. Is it coming from a higher time frame key level? No, this is the high rather. This is the highest point here. Is it coming from a higher time frame key level? Yes, it's coming from a higher time frame key level. That's one thing you need to understand. It's coming from a what? Higher time frame key level. So did it swept liquidity? That's another thing you need to ask yourself. It swept this liquidity before breaking it to the downside. It also did what? Swept another liquidity here before breaking this to the what? Downside. So this is now where I'll now be drawing my dealing range for. From this high here, or from this overall here to this here. So me drawing my dealing range, I already know that this is my what? internal targets. So I know I'm not interested. I want to look for a key level above this internal target. So I'll move back to my daily. So on my daily, what is the same entry? QM, apex, FEG. So I have this QM here, that is what? Fresh. So this QM here now will now be my what? In this scenario now, there's no FEG. I just only have that QM that is what? That is fresh. So this will now be my what? Supply key level. This is my supply key level. So since I have my supply key level, then I'll move to 30 minutes or 1 hour, anyone. What do you want to now start doing? You want to start doing what? First thing you want to first do is you want to start looking for buy till market gets here. Because this is one significant point that I want to deceive traders, right? To sell from. So, and to sell from. So here now, market gets here. If you start investigating it, you start seeing. But I'm not interested in that. So, but if you check the current break that market give here on 30 minutes, you can simply use your 1 hour anyhow you want to. But if you check the current break that market give us, the current break is this. So after this current break, what do you want to see? You want to look for your entry. And what is your entry criteria? QM, if QM has been used. Apex, in this scenario now, price has used this QM. You see, when before price break this high, price use this QM, so I'm not interested. What else again? This apex too has been used. So what key level do I have? It's just this one here. That's the only key level I have there. So this will be my what? Demand. I will call it demand key level. And you can also still move to 4 hours and see if you can refine it. Refinement on 4 hours can still hold on to this. Can still hold on to that. You understand? So now, how did I now enter those sales? So since I know that, okay, I have a demand key level. Since I already know that, okay, I have a demand key level, that price should come to here before price comes to this overall strong key level that will start pushing price to the downside. So I was expecting a pullback after this aggressive move. So the pullback now happens from here. I've even forget the place I entered from, but if you start studying it now, this is not a valid break, so I won't really use it. And it did not even sweep a liquidity. You get me? So I won't really use it. So this is another break here. This is another break, but this is like an impulsive move. I can still say this break did what? Swept this high here as a liquidity. Then let's check if we can have a key level. But because this is an impulsive move and this is a fair value gap, we have FEG here. We have FEG here already. So I want to look for what? A key level first at this level here. So a key level I'm seeing is this OCL. And this will have been a missed entry. But if you follow the protocol, the normal protocol, this will be my entry, right? If this is my entry, then 2 pips or 1 pips below, you can see 2 pips. Market did what? Tap in after taking it out. So after market tap in now, what did I want to do? 5 minutes. And what do you want to do on 5 minutes? You want to look for your what? Confirmation. That's just simply how I do trade. Your confirmation is market tap in. Market tapping, it gives us a what? A structure shift here after taking out this sweep and a break. So after the sweep and the break, you go back to the 30 minutes and do what? Look for your what? Entry. So in this scenario here, this is literally what? A miss entry. This is literally a miss entry because price tapping, it did not give you what you want. So it's actually what? A miss entry. So then you wait again. You can just simply delete it. Then you wait for another proper break again. I'm seeing this as this break is not valid to me, so I'm not interested, and it did not take out the ISO. But if we check this now, this is another what? Break, and that is another break, and there was like a sweep of this liquidity here. So since there is a sweep of that liquidity there, I already know where am I entering from. The same entry criteria, go to this level here. The same entry criteria, I have this what QM blah blah blah, no QM, I just have this apex as my what supply KL. So when price come there and tap in, what will I do? I'll go to 5 minutes. So once I get to 5 minutes, what do I want to do on 5 minutes? Price has tapped in, right? What did I want to do on 5 minutes? You want to look for your what? Confirmation. And what's your confirmation? Price break to the downside here. So here now I have in form of a what? A sweep here. A sweep here and a break here. Then I'll go to what? 30 minutes back. What did I want to do on 30 minutes? I want to enter from 30 minutes, right? I want to enter from 30 minutes. But in this scenario here now, there was this, there was already a sweep and a break here. So in this scenario, we have what we call this FEG also. So inside this FEG now, we want to look for the first key level that is very closer, which is this, and I'll be what? Entering from here. Entry from here, measure 1 pips below, 2 pips below your entry, because I love using 2 pips instead of 1. 2 pips below your entry, 2 pips below your entry. Then you mark this as your invalidation area, the wick of the candle FEG, and you target the what? Nearest liquidity, which is this. You can see that was the what? First entry you have taken from this sale. You can see that you are trying to sell, but you are not seeing a confirmation. You are not forcing trade. You don't need to force the trade. That's just one thing you need to understand about yourself. You don't need to force it. If the move actually wants to happen, it will happen. You don't have to start forcing it. So now sorry guys, now we have another what? Break to the what? Downside. After another break to the downside, what will you do again? 145. The same thing, QM, apex. You understand? It's the same logic all the time. Then you mark this as your what? QM. But yeah, now this QM has been what? Has been used. You get me? This QM has been used by this candle here, so I won't regard it, right? Likewise, this apex too is fresh, but because of this momentum and this fair value gap here, I won't consider this apex. I'll just consider the OCL, or I should even consider the key level inside the what? FEG. So this will be my what? Another supply key level, but I'm not what? Entering directly inside this supply key level. So I'll wait. If price starts in and I see how price do his things, I'll wait for a what? Confirmation on 5 minutes. So now price starts into the supply key level. I need a confirmation. And what will be my confirmation? A valid structure shift. So in this zone here, price tapping. After price tapping like this here, it gives us a what? A shift to the downside here. And this is another shift again to the downside. So I will now move to what? 30 minutes. So what I want to do on 30 minutes, there is no QM here, but this apex is still what? Fresh. Then I'll use the what? I'll use the apex what? Instead. Then I'll put my entry from here. But I'll mention what? 10 pips, 2 pips below my major entry, and then I will enter from these 2 pips below. Stop loss should be at this sweep, and my TP should be at this next low. You can see how that move, or if you have your mind, since the next invalidation level is somewhere here, the next external is kind of close, you can just push it like this. But I did not push it like this. I think I picked 5 RR from it. So but if you have mind, you can just push it all the way down. But I actually picked 5 RR from it, and this is just it. No, now that price has broken a new low now. This is a low that price has break. So your ideal logic is price should do what? Come to this apex, because to this QM rather, because the QM is fresh. But we have this fair value gap. Always have that in mind. We have this fair value gap that market created. So I want to look for a key level beneath that fair value gap, so which is this. So ideally I'm expecting price to come here. So if price, this will be my new supply key level, but price did not what? Price did not come there. Price did what? Do whatever he wants to do. But that does not mean that you now start, because price has reacted from this OCL, I'll now start trying to price did not what? Give me what I want, then I'll leave it. So I hope I'm able to explain myself to some extent. I'm able to explain myself, and I think that will be all for this video. I think that will be all for this section, and see you when I see you. I can't actually promise you guys that this is when next I'll be doing another video like this, but see you when I see you. Peace out. Try to study the chart and try to first understand the type of trader you are, understand your personality before understanding what time frame to use. One love, peace out, and stay blessed.